GM, good morning. Welcome to the Milk Road Show, the daily crypto show that hides alpha like your uncle hides Easter eggs, poorly and behind the same bush every year. I'm your host, Jay Hamilton. It's Saturday, April the 19th, and the Milk Road Pro boys are back. That's right. We got Kyle and Martin in the house today. Two guys who do absolutely nothing but read Twitter and look at crypto charts all day, every day. Now, every Tuesday, we have our internal research meeting and we talk about it, everything that's going on in crypto, what we're paying most attention to, and then we release it to you guys for free on Saturday. So you know exactly where we see the signal amongst all the noise, and there is a lot of noise right now. And what we think is most important for you to be paying attention to today, we are talking about 99% of all tokens in crypto are absolutely garbage. They're trash. And I know that sounds extreme, but it's true. There's just it's too easy to launch a token. And when it's so easy, there's going to be a lot of speculation and a lot of bad actors. And so the natural question is, how do you build a portfolio and a successful investment strategy in a space with millions of bad investments that are trying to get your attention constantly? That's a really important topic that we dive in today. We also talk about the majority of on-chain lending is now DeFi versus CeFi. In 2018, it was 100% CeFi. Today, it is majority DeFi. Will this continue? Will banks use DeFi? What about fintechs like Robinhood and Revolut? We also talk about the stablecoin bill that is coming in the US, and rumors are that it might not allow yield-bearing stablecoins. What does this mean for decentralized stablecoins like Sky, Maker, Athena, those that offer yield? We're going to explore that. Now, if you want to get today's episode on Tuesday when we record it, you can go pro. Check out the link in the show notes. Also, another reason, to be honest, why you should go pro, the main reason why you should go pro is today, Kyle just wrote a pro report that got released that he dives into the macro setup right now and answers one very important question, which is when and will we see the bull market come back? What are the things he's looking for? What is going to actually trigger that to happen? Today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. With that, let's jump in and hear from the boys.
Gentlemen, welcome back to another Milk Road Pro Research meeting. We are without Adrian once again. He's unfortunately sick. But we got the three of us, Martin, Jay, myself. Before we get started, Martin, what's going on with your head there? Looks, is that a Band-Aid on your forehead, on your eyebrow?
Yeah. I was playing paddle and I wanted to catch a ball, but I didn't manage to catch it, and I just fall right into my racket and just hit my head.
You hit your own racket?
Yeah.
You headbutted this racket. I hear that's a really good moving paddle. And did you get the ball? Did you hit the ball?
No, I didn't.
No, so you lost the point.
But they just fix it, and I got a Band-Aid, and then we just continue and play. And then I came home, and my wife was like, "What? You were still playing after that?" And I said, "Yes, I did." And
yeah.
Such a good game. Kyle,
did
I know
win?
you play golf all the time, but it's super boring. It's for old people. You should really pivot to something more fun.
If you're in golf, pivot to paddle. I play squash, which is like the real man's paddle. No, it's way more intense. It's way better.
Oh man. Yeah.
It's like actually hard. Like paddle's like slow motion. Like you're like
aren't they
running around
like the same sport?
Maybe I'm thinking pickleball. I don't know, honestly.
I think you're thinking pickleball versus paddle and squash are like very similar.
No, squash is on a wall. Paddle is against someone.
No, paddle also has walls around the court.
Yes.
Yeah.
Yes.
Oh, okay. Well, shit, I gotta learn.
Oh man,
okay.
I don't even know.
Martin might move from Milk Road to like paddle tour or something like that.
Yeah.
He might go work, or maybe he'll just work for a local paddle club or something.
Well, actually, before the Permissionless 3 last year, there was a tournament, and I thought it's in paddle, but it was in pickleball.
Pickleball,
it's not for me.
How do you feel about pickleball?
Less fun. Not many people playing paddle here. Pickleball, I mean, but everyone's playing paddle here.
Okay, we're here to talk about crypto, right? It's a research meeting, I think.
Okay. Yeah.
So I think everyone's listening and they want to know. Actually, what I do want to know is, did you win the game with the bloody face?
Yes. Yes.
Yes, my man. Okay, that's what we're talking about. All right, so today we are talking about why 99% of all tokens in crypto are complete trash. But honestly, it's true, and honestly, it's something that you guys all need to realize. And I think most people don't realize it, or I think even I tweeted this out and someone commented like, you know what, it's true and it's obvious, but it's always nice to like rehear it because you often forget. So we'll talk about that. We're going to talk about some CeFi, DeFi lending stuff. Obviously, DeFi is doing really good there. And the last thing we're going to talk about is some stablecoin stuff, along with the stablecoin bill, and then just a framework that Martin's got on stablecoins. I think he's going to write a pro report on it, but we'll chat about it today anyway. Okay, let me share screen here. First up, maybe I'll just read this tweet and then I'll set some context and we'll talk about it. So the other day, this actually comes off of the Ohm crash or Mantra, which went down 90% in like 2 hours. And then I don't know what happened, but something with IP it also went down like 20% in like a couple minutes. And so the thing, and look, I'm not commenting on either of those projects, but basically what I wrote was, if you haven't figured out yet, 99% of all crypto tokens are complete trash. And the reason for that is they either represent useless tech, they have consistent dilution or inflation from incentives, airdrops, token unlocks, etc. They're artificially priced from market makers. They do not accrue any value from the success of the protocol, or they're just an outright scam. And unfortunately, most tokens are actually a combination of all of the above. And put all this on top of the fact that most startups outside of crypto, just normal, most startups fail within a few years. Like 99% of all startups fail within a few years. And so unless you got in pre-token launch, the odds are extremely stacked against you to win in investing in crypto tokens, like liquid crypto tokens. Now, of course, there are some that do well and will do well and that are legit and don't fit in any of those categories. But the thing I think people need to understand here is like, let's put crypto aside for a second. Let's say you were to invest in just businesses in general, right? There's only a small subset of businesses that IPO. These are bigger businesses. These don't have all those problems for the most part because like they've been around for like, usually you don't IPO unless you've been around for like 10 years or whatever, right? It's not always 10 years, but whatever. So picture every other company in the world that exists that is private, that is not IPO'd. They just started yesterday. They just started 2 weeks ago, a year ago, whatever. Now, here's the thing. Most of those companies are garbage. They're terrible ideas run by terrible entrepreneurs that are never going to make it, right? They might make it for a few months, a few weeks, a few years, and then they die. 99% of all companies in the world just die. That's just how the capitalist world works, right? That's just how entrepreneurism is. It's just tough. It's a grind out there, right? There's just not a lot of good companies. That is what it is. But in the non-crypto world, it's not that big of a deal because when a company fails, just the founder fails and they can move on to like getting a job or like founding a new company, right? Maybe they got some money from VC or a family member and that goes away, but like is what it is. The problem in crypto is that we launch tokens before most companies even have a product, right? And so companies in the real world, the non-crypto world, they don't have this. They don't have publicly traded liquid equity, right? That only happens once you become a big, legit, successful company, right? Doesn't mean you're always going to be legit and successful, but you kind of don't get to IPO until that world. But in crypto, we IPO, and I say that in quotations because we're not IPOing, but let's say, you launch a token, and in most cases, you actually launch a token before you have a product or before you have product market fit. And the problem with that is now you obviously, if you look at the marketing of a lot of these companies, they focus their marketing and their attention and their strategy on the price of the token and marketing the token rather than marketing the product. And so you have all these people, these retail people buying these tokens for these companies that they think are going to be great. And yet again, they're all actual shit. And even worse, the instrument that they give you to invest in is even worse than the project itself in most cases, because it has, artificially priced from market makers. It's got dilution. They're airdropping a bunch of these tokens, blah, 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 whatever the reasons are. There's so many. And so like the thing people need to understand when you want to invest in crypto is it's extremely difficult, especially now, but the odds are very much stacked against you, which is also true in the non-crypto world. But if you think about it, angel investors, which are ones that invest in early stage companies, like what most crypto companies are, They invest in 1,000 of them, expecting that one wins. They expect to lose a 999, but they think one will go to $1 billion company, and that's where they make their money. Literally 1,000. Nobody here is investing. Well, I don't know. Most people here are not investing in 1,000 crypto tokens. Yet the odds are even worse than those who are investing in angel investors, in my opinion. So this isn't to say you should invest in crypto. There's some incredible outsized gains that you're not going to get anywhere in the world, but you can't just invest surface level and just be like, this sounds like a great product. That looks like a good, they have a good social media account, or they have a good like leader, team leader, whatever. It's way harder than you think. And there's just so many more things that people are not realizing. And so I just think this is maybe a PSA. I also want to get your guys' opinions, but this is my PSA to everyone else. Like, dude, this stuff is way harder than you actually think. And most of the stuff is actually complete trash. Do you guys agree, disagree? Do you think I'm an idiot? What do you think?
What is PSA?
Public service announcement.
Okay.
It's a warning.
I completely agree. I think it's a harsh reality to face. I think you learn this if you've been through the cycle before, you tend to know this. If you haven't been through a cycle before, you tend to not understand this, because there's a real survivorship mentality in crypto, which focuses on the coins that have been around for multiple cycles and looks at those coins, meme coins that have been around for multiple cycles. I'm not talking about like fundamental based coins. I'm talking about like non-fundamental based coins. I mean, and let's be real, there's not a lot of fundamental based coins in crypto. Like maybe there's like 20 or 30 realistically. But that mentality of, oh, well, crypto's been around for 50, Bitcoin's been around for 15 plus years. Crypto's been around for a while. Oh, everything's going to go up over time. It's really easy to get stuck in that trap and believe that, especially when you're in a cycle, and especially when it's your first cycle and you pick an early coin that goes up and you see that you have picked a coin that goes up. You feel like, oh yeah, like all the coins I pick are going to go up. And you start to really overinflate your abilities and the picks that you're making. But yeah, it's true. Like we are an extremely speculative asset class, extremely speculative. That's really all we are, is just pure speculation. So if you're in a pure speculation asset class, 99% of stuff can't go up. Otherwise, I don't know, we'd be breaking the laws of like investing and the laws of physics, right? Like, let's be honest. Everything in crypto comes with fees. But here's a nice surprise. MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer, network and ecosystem fees apply.
You make a good point of those who are in their first cycle don't get this. I would argue though that those in their second cycle don't get this either, because any cycle previous to this, there was a small amount of tokens. Like last cycle, there was a small amount of tokens, like less than 10,000, right? And then the cycle before that, even less. And so basically every token did go up, right? Because no tokens had
last cycle.
Back then.
During last cycle, you're right.
Yeah, because every cycle before this, there was no such thing as fundamentals. No one was making any revenues. Nobody had, except for like Ethereum was making revenues at that point, but like no one had good tokenomics basically at all back then, because everyone had just started launching tokens. So like everything was, like you said, speculative. And so it was kind of just like everyone was just chasing the herd, and there was a bunch of people that came in all at once last cycle, and just wasn't a lot of tokens. So everything went up. It was like, if you were in a bunch of tokens and a bunch of tokens went up and there was one that didn't matter what it did. You're just like, oh, I'll buy that thing because it's going to go up, and then it would go up, right? Like everything went up. Now though, we actually do have, we have a gajillion tokens, right? We have probably the same amount of people, if not less than last cycle, to be fair. And we actually have tokens with like strong fundamentals. And so there's kind of I don't want to say a safe haven in crypto, but like sort of a safe haven, right? Like Bitcoin, you could say is definitely a safe haven, at least in crypto. And there's others that are actually becoming more safe havens because like they have revenues, they have fundamentals, they have things to back it up. They don't have dilution, et cetera. So like there's actually a difference between tokens today, Whereas last cycle, they were all the same thing. They were all ideas of a potential product that might do well in the future. And they all were just shit tokens, right? With no fundamentals. Today, it's actually kind of different. And so it makes it, I mean, it's better for the industry. It means the industry is maturing, but it definitely makes it harder, right? There's like, it means you actually have to do research today to understand and like try to find things that are actually undervalued. Now, it's not to say that like shit tokens won't do well. Like this is like, I'll bring up this tweet here that Mike Dudas put out, which is I really enjoyed. And it was like, thematically, being net short the entire basket of alt L1, L2, and infra vapor is the best trade in crypto. It's just a matter of how you put it on without getting eaten up by funding costs and counterparty risk in the meantime. Essentially saying there's just so much garbage in this space, and if you could short it, you'd do well. The problem is, and you can see it in the comments below here, is like, it's also sometimes the worst trade in the world because you have like some of the worst tokens and the worst projects that are just complete trash that all of a sudden pump 100% in like a week. And you're like, how did that happen? Right. But it happens all the time. And part of it is because what I said, market makers like pumping up the prices, right, to try to make it look good. It's like random marketing tactics that projects will do for their token instead of their project themselves. It's like just random things that don't make sense. And so like you actually just can't short all this garbage. Even though it would be like, I'd love to find a way to do it in some sort of way that where like you can't get blown out. Because there's just so much garbage in crypto, so many things that I don't want to touch at all. And I would love to be able to somehow short it. I don't short things. So like I wouldn't even know what I'm doing. But like if there was a way to be like, I want to be long, Bitcoin and a few other fundamental assets and then short everything else, you'd do so well. But I just like, you can't short this market because it's just, again, it's manipulated, I guess, is probably what it is. It's weird.
I also want to comment, like, I think these are all costs for being early into something.
Yeah.
Because we needed that VC money and therefore unlocks for them to fund like everything that has been built over the years. Also the unlocks for team members who are still building and here. Then I would also argue that token incentives are still net positive for the industry because otherwise we wouldn't be able to attract that many people. And I believe that still we got a lot of activity just farming new tokens and those kind of stuff. And while we can disagree that this is a kind of positive behavior and kind of activity that you don't really want, at the same time, it's giving you kind of test and kind of experiment, and like it helps you to see what's sustainable and what's not. And unlocks, yes, like in the long term, you probably don't want to hold tokens with a lot of unlocks, but they were and they still are kind of necessary, I think, for many projects. Also, the incentives still, even though right now incentives still feel, it already feels less important than in previous cycles because we now have kind of we see what's already working and like the major use cases and some products with BMF, and then it's really hard just to came in and say, hey, there is our stablecoin and we have much higher APY, but everyone knows at this point that it's gonna be just artificial inflated by their token emissions or whatever.
Yeah, look, I'm not even saying that necessarily it's a bad thing that these tokens have, let's say, dilution or inflation, and they do incentives and things like that. Like in the traditional world, like I run a company, let's say I start a company and I need to get investment. I don't give away 100% of my company for that investment. I maybe sell 5% of my shares, right? And then the next time I get the next investor because I need more, then again, I give away another 5%. And I keep diluting myself and my employees who I might be giving, like as I hire more people, I'm also giving them shares. Like it's the same thing in the traditional world. And like, for example, CoreWeave just did an IPO and they only did an IPO with 5% of their shares, right? Of their company shares. So like, this is very common. This is how it always works in TradFi. But the thing is like, usually you want to wait years and years and years unless you're getting in early, right? Before IPO, you want to wait until all that dilution and everything's been figured out and the company is part of market fit and they have revenues. That's when it's available to the public to start investing. And the problem with crypto, whether it's a problem or not, I don't know, is like, I just think people don't realize it is like, hey, you're investing very, very early stage. And so like dilution has to happen for the company to succeed because they need to keep raising money. This is normal, right? And or this kind of new dynamic where it's not just about raising money, it's incentivizing users or whatever. And so like, I'm not saying that's a bad thing. I think these are all good. You just need to be aware because it's like, hey, this company that just launched a token that might be a good product it just might not be a good investment for like 5 years because it needs to get through the dilution, the incentives, the raising of capital, and blah, 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 like all these things. And so it's just something for people to be aware of. Doesn't necessarily mean it's a good thing or a bad thing. Now, I will say though, there are, of that list of things that I mentioned, most of them are actually net bad, right? Tokens representing useless tech. Okay. That's a net bad. There's no reason that that's ever a good thing, except for in some cases, some smart entrepreneurs have then taken the capital from that token and then bought other companies with it. I won't say any names, but maybe you guys know who I'm talking about because people will yell at me on the show. Artificially priced tokens from market makers, obviously a net bad thing. We should never have that, but we do. Not accruing any value from the success of the protocol. This is not a bad thing, in my opinion. This is normal, right? We, like, most companies don't give dividends or do share buybacks until many, many years until their companies. Like, that's not a bad thing. It's just, again, something you need to be aware of. It's just a reality. You don't want them to be buying back tokens on day one. You want them to focus on growth and building better products, etc. And then the last one was just they're an outright scam. Obviously, not a good thing.
And one more thing I would add here is that I personally really hate in crypto, and we had that conversation last week, is sometimes you hold token, which you expect that you have a kind of rights on on the product that they are building and also the future cash flows and revenues. And then later on, you figure out that there are also foundation or labs who is also kind of making some rights on that product or the revenue. So is it like, okay, so there are two different parties who both want some share of that revenue, and like who should really have that like
Right.
final
Like
vote, right? So it's like
Uniswap Labs and Uniswap
Uniswap
token
Labs,
sort of
yes.
things.
Cheeto, it's the same thing. Now it's about Aave and Avara. So like it's really not positive view for like I always think about tokens, like try to go and sell those tokens to people who really invest just in stocks because they will think very critically and looking at the key metrics, and they will give you a good kind of sense of, okay, maybe I was just wearing purple glasses, but I'm not really realistically and critically thinking about all these aspects that these guys are. And like I think we need to get much closer to these people and to equities like investments sort of thing. And once we get there, I think it's the whole industry will be much better positioned.
Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift.
Good news is I think a lot of these issues will get fixed with the market structure bill that I think is coming in. They're saying August. Who knows if it actually is? But I think that will make a big deal for a few things. One, the reason you have the Uniswap Labs and the Uniswap like DAO or whatever with their own token and that kind of discrepancy, same with Cheeto and all them, is because in the US they weren't able to just like launch equity for their company as a token, right? It wasn't allowed. So they basically would launch a token, have this DAO, and then they would have their existing company have its own equity in the private way because they had to separate it, right? Like otherwise they were afraid to get sued by the SEC, which the SEC was suing all of them at the time. And so like they were forced to do that. I think hopefully once, and probably it's already going to start now. I don't think we got to wait for the market structure bill, but like when that comes and we have more clear like guidelines here and regulations, like you'll just launch a token and it'll just represent the company and / the DAO. It'll all be kind of one thing. I think maybe not, maybe this is just the way it goes, but so that, and then I think with the market structure bill, I don't even know if this comes in the market structure bill, but the SEC is also working on this, which is they're going to figure out what is a security and what is not, which a lot of tokens, like they just are securities. And that's not a bad thing or a good thing. They just are. And again, that just means they need to go and fill out some paperwork. They need to apply, get approved, and then it's all good. They can still trade and do whatever they normally do, but they just need to get approved first. And then they just have things they need to follow, which is like if you're going to sell and dump on on people, you've got to announce that before you do it, which probably prevents them from doing it. You know what I mean? Like, you need to be just more transparent about what's going on with the token price and the tokens and where they are and who's holding them and what they're doing with them. It's like, it's going to really help create a more transparent, as much as we think crypto is permissionless and open and transparent, it's actually very opaque on the token side of things. Like, you have no idea what's going on with these tokens, no idea in the background. And so I think the market structure bill should help with that. And it'll make these tokens just have a lot more, I don't know, like rules, which is just good for investors. You know what I mean? So hopefully we start to fix that. There will always be a world of just like non-compliant tokens, and those will exist and they'll just remain, right? And that's just going to exist, but there's nothing we can do with that, right? This is permissionless tech. But again, it's just up to you as an investor to notice that. It doesn't mean you shouldn't invest in ones that aren't compliant. They might still be great tokens, right? But it's just, you just need to be aware. And right now, I think just most people are just not aware of what's going on behind the scenes. And that is not good for markets. That's really bad for markets, especially retail.
Why aren't most people aware? Is it because the traditional investment asset classes they're comparing them to that, and they're saying, oh, well, if I can invest, maybe in their subconscious, they're saying, oh, if I could invest in a stock over here and I can invest in crypto over here, then they must meet some sort of similar standards, even though they're completely different. Is it because there's too much noise? Like, there's so much noise in crypto and impossible to know who to trust and who to follow? Is it because most crypto investors don't take the time? You said yourself earlier, Kyle, you got to do the research now, right? It's not what it used to be, And is it because too many aren't willing to take the time to actually develop an investment framework and an investment strategy and stick to it and see it through, Because like every time we have this conversation, it seems so obvious that so much of it is trash, and maybe it's just obvious to us, but I feel like it must be obvious to others as well. I just like, what's the disconnect?
I'm about to answer this with the blunt thing that I always do that my girlfriend hates. But before I do that, I will say part of it is because a lot of things are opaque, and so like people just actually can't find the answers, which is unfortunate. But the real answer is most people are just surface level learners, right? Everyone, and this isn't even about crypto in general. It doesn't matter if it's health, it doesn't matter if it's crypto, if it's investing, if it's like politics, whatever it is. 90% of the world, they just learn surface level stuff. They read headlines and that's it. They do nothing more than that. That's how people deal with their health. That's how people deal with their psychology, their stress, their investing, their everything. They just read headlines and they just do surface level research, and that's it. And that's just never going to win you anything. You're never going to get healthy. You're never going to be a good investor. You're never going to get good at anything if you just remain surface level. But 90% of our world, that's what they do, because they just get their information from TikTok, Twitter, Instagram, whatever, which is all surface level stuff. I don't know about 90%, I'm just making up that number, but like most people in the world, that's what they do. Mm-hmm. And that's the problem, is like you can't, if you want to invest, especially in crypto, it's like, you can't be surface level, right? Like you need to go deep and really understand what you're investing in. If you want to put a lot of capital, like, look, if you want to go and punt Fartcoin, there's nothing you need to do there. Just go and punt Fartcoin, right? But like, should you put?
Well, depending on how much money you're putting into it.
yeah. But there's no research regardless. You know what I mean? So I don't know. It's like you need to either like do the research or subscribe to people doing the research for you, and then like even that, like people who subscribe to Milk Road Pro. I don't think you should just blindly do what we tell you to do. We're going to do a lot of research, and we explain it in detail for you in our Saturday reports and in these meetings, which is very useful. But like, then go and also do a bit more research yourself, right? Fact check what we say if you need to, or go and listen to someone else too, right? Like get another opinion. Like that's just keep peeling back the layers. That's what you need to do in investing. And here's the thing. The more you peel back the layers, the more you realize that almost everything in crypto is complete garbage and you would never put any money into it. That's what I've realized since starting pro, is like, because that's what we do. We just sit there and we peel back layers, and like Martin or Adrian or someone comes to the table with this like opportunity, and we just sit there and we rip it apart, and we just keep ripping it apart. And we end up going, fuck, that's another shitty one. Damn, another shitty one. And it's like, it's so hard to find actual good investments because almost everything is complete garbage. That's the thing I've learned by going deeper into crypto, which is like, sucks, but it's also a really good thing because it prevents us from buying most of the garbage. But which even the things you think are good still could be garbage, so it's even harder.
I kind of want to replace your. I would say I don't know if I agree with the it's complete garbage. I do, like, I know what you're saying, but I would like to say it's highly speculative because yes, it
Or it's
is.
just too early.
That's why I say
currently it's
highly
garbage, but
speculative. Do
yeah,
you know what I
okay,
mean?
yeah,
Exactly.
gotcha.
That's
Yeah.
why I'm saying like it's just highly, highly speculative. Maybe it's not garbage. That's because look, there's a lot of coins in the top 50 that the three of us would say right now are complete garbage. But maybe some of them work out. We don't, it's so early. So I
Right.
think it's just the expectation that everything goes up. I think also I just got a comment. Your first thing of everybody's just surface level is so true. And I have to say the reason why is nobody has focus and sticks to their lane. And this is true.
Yeah.
I'm going to focus on in investing for a second. It's true in everything, but particularly in investing. I mean, even we can use, Martin's example of paddle. Martin has decided that he doesn't want to play golf and he loves paddle. And as a result, he's getting better at paddle because he's focused on it. He's not trying to take on any new sport or anything like that. Same thing in investing and in crypto, especially. So many
Niche.
people go outside their lane. All of a sudden, they're a meme coin investor, or all of a sudden, they're chasing AI coins, or they're chasing a new narrative. And you can't do that because you cannot have, unless you have all the time in the world, maybe, and you have no life and you can research multiple narratives and multiple companies and multiple different areas of the space. But it's just stick to your lane. And if you stick to your lane, you will be much more successful because you will notice things that other people are not aware of because you are deep in DeFi or you're deep in, like you said, I could see somebody having a thesis on Fartcoin. Like I get what you're saying. There's no fundamentals to Fartcoin, but like I could have seen somebody a month ago or, saying, hey, I think Fartcoin is the meme coin, is the AI meme coin. I think
hot air rises. There's
hot air rises.
Sound thesis.
It's going to get a lot of media attention. Like I could have seen somebody build a thesis around Fartcoin and say a month ago that they thought it was, and look, you'd be up like 3x right now. So but you, in order to build that thesis around something like Fartcoin, you had to have been following it and in it and in meme coins for a while. You wouldn't have just all of a sudden been able to do that. Or if an influencer told you to go do it, you wouldn't have known what was right and what was wrong from them. You just would have trusted them and made, and
you got to become an expert in that thing. And so if you want to invest in meme coins, you got to be an expert in the trenches, right? Yes. It's like we actually had some tokens when we originally launched Milk Road Pro that we consolidated, we got rid of because we're like, you know what, we just don't cover that sector enough. We don't have an edge there. And so we were down a little bit on it and we just sold it out. We were like, you know what, we don't know when is the right time to be buying or not buying these things. And so we got out and thankfully we did because it's gone down to much more then, but we just don't cover it. We don't understand it. Right. And so you got to invest in things that you it's like one of the most important investment advice for sure.
Yeah, you said it, like you need to have an edge. What's your edge? Like if you hold something, everyone should try to answer that. And also the other thing is I can make a bull case for everything, but also you should think about the bear case. And this is something that people usually don't do at all, but it's a very good exercise and everyone should also do that.
Yeah, no, that's a good point. All right, let's move on to the next topic, though. That was a great conversation, gentlemen. So let's talk about this chart here that's went quite viral on Twitter. And this is looking at the market share of lending from crypto lending from CeFi versus DeFi. Back in 2019, see if I can full screen this guy. Back in 2018, 2019 was basically all CeFi. And then 2021, obviously, things got really big with like BlockFi and FTX, et cetera, and they all collapsed and they went down. And now you see DeFi lending is at 60% of all lending, which is pretty cool. And this doesn't even include CDP stablecoins, which is like, I think this is like Sky, right? Would that be Sky? Yeah. So it's much higher than this, actually. I don't know why they don't include that there, but quite interesting. What's your take on this, Martin?
I think it clearly shows that people start to finally realize how important the kind of security around DeFi is. I mean, like if you use CeFi lending, you are basically lending to some other party that you have no idea about. And like, what if they are going bankrupt or whatever? But in DeFi lending, it's like 99% is over collateralized lending, which is, okay, I'm going to lend someone money, but there are smart contracts that make sure that these people always have higher collateral than they are borrowing from me or like other people, from pool of capital basically. And yeah, and also like it brings you more composability. So like, I might lend to Aave, I will get the liquid representation of my kind of stablecoin that I lended, and I can use it further. So I feel like it's clearly showing that people start to prefer DeFi lending over CeFi lending. And I think we will see another stage here, which is from CeFi lending, we go to DeFi lending. And from there, I think we will emerge into the savings products, which are like, think about your savings account in your bank. So you will just hold some yield bearing stablecoin like SUSDS from Maker or whatever, and they will do all these lending for you. So you will just give them your money and they will give you a yield. And what they will do with all your money, they will go and kind of supply that to different lending platforms. So you don't need to do that for yourself, because now
Right.
if you go and lend to Aave, you are only limited to Aave and the dynamics between suppliers and borrowers on Aave. But maybe at some point it's better to lend to Compound. But I don't want to do it. I don't want to track the markets and monitor them and like moving my funds around. So I can just kind of lend my money to Maker or just buy SUSDS, which is their stablecoin
Right.
savings
And they do it
product,
for you.
and they will do everything for me. So like, yeah, I think that's the end game here.
What about, so as the market structure bill comes in, which we just talked about, and regulations are getting much better in the US, and now with some of the changes already, banks can start to custody crypto. What about when banks start to custody crypto? Are they not going to be like allowing for lending, and you're just going to use it in your bank? I got a feeling that that's going to take off because, of course, they have all the users, right? And I don't know, like Coinbase has done this in a beautifully smart way that is great for everyone, which is like you can still do it in the Coinbase app, so where the users already are, but they actually go and move it on chain, create you a smart wallet in the background. And they do it through Morpho. So like that is DeFi, not CeFi. But I wonder, like banks probably aren't going to go that route, at least not right away. So do you think that we get like if we, let's say we, crypto goes nuts over the next year and a half or whatever, because of these new changes and rules and I don't know, we print a bunch of money, et cetera. I would imagine banks start allowing you to lend crypto. And that probably means really bad things ahead. And we go through what we did in 2021. I just thought of this now. I never thought of this before, but do you think that happens? Why wouldn't it?
You mean stable coins or like all crypto?
All crypto. Like, why wouldn't I be able to go to Bank of America, give them my Bitcoin, and they give me a yield on it? They're definitely going to launch that product, right? Like, why wouldn't they launch that product? That's the reason why BlockFi and FTX and all them launched that product.
Yes, but I think we are still quite far from there. I think like
Think so?
Coinbase, Robinhood, those are like the early adopters, and yet like Coinbase just allowed that, right? So
Yeah.
Bank of America and all these traditional guys, they are quite slow, and I think it will still take a couple of years, I think.
I think that's going to be a eventual like black swan event that like similar to what we had in 2022 with all BlockFis and Voyager and all that. It's going to happen with the banks at some point probably because they're going to get too excited using things like Bitcoin and ETH and Sol or whatever. I don't know.
Let me show you guys something here. Let me pull up another chart. This is from the Coinbase institutional investor survey that happened like a month ago. So this is not banks. This is like VCs, private banks would be in here, asset managers, hedge funds, that type of thing. Okay, 350 institutional investors, all managing an average of $1 billion, and here's the results on DeFi. So currently, 24% of these institutional investors engage with DeFi. So some, but low. But in the next 2 years, 51% plan to start to use DeFi in the next 2 years. So the institutional side is definitely going to use DeFi. That much is very clear to me. The big banks, I'm not so sure. I agree that it would make sense for them to go the Coinbase route. I think we're going to see both. I think we're going to see some do the DeFi and some will
the
do
Coinbase route is DeFi. They integrate into DeFi. What I'm saying is banks won't go that route. I think they'll do the BlockFi route, which is just like, give me your Bitcoin, I'll custody it. There's nothing to do with DeFi, and I'll just go do things behind the scenes with other financial institutions and lend it out. And that's where things get dicey. But I think that's what banks are going to do. And that scares me a little bit. So
But
anyway,
now
probably
I
2
think
years too early, but be aware. It's coming.
I agree with this CeFi take, and I think the banks will do it. But ultimately, what will be the key differentiator is the product, because I think with AI agents and the future we are heading is that the whole market is becoming more rationalized, and like I might be able to do a sophisticated decision because I use blockchain all the time, but like maybe my wife or my neighbor, they don't, because they don't use it. But I think that we will live in a world where AI agents will help us to filter the best products. Like,
Right.
we are all using aggregators today, like Amazon or Netflix or whatever. Those are all aggregators. So I think at some point we will start to use aggregators even for kind of financial services, because right now we are just isolated to our bank. So if I have savings product in my bank, I'm only kind of limited to the yield strategies or to the users that these banks are using today. But I would assume that if people have an option to kind of jump between different savings products that are getting the best yield, they will do it. They would do it, right? So
Agreed. So I agree. DeFi will win in the end. I'm not saying that DeFi is not going to win. They definitely will win in the end because it's way better, because if AI agents can use them, it's better yields. There's so many better things to it. My assumption is just banks don't go from zero to using DeFi. It's
yeah,
from zero
yeah.
to doing their own lending in their own custody to then maybe using DeFi. Unless Coinbase like really succeeds fast enough here, then they all see that and they just leapfrog. That would be the best thing, the best case scenario for our industry. I don't know if will do
I
that.
think this fintech 2.0, like Robinhood and Coinbase and Revolut and these guys, they are the gift for the industry, because
Yeah.
now we are not able to bring DeFi to people, but they are, because they have the user bases. So they'll just need to integrate some DeFi products, and there it is.
Right. By the way, you want upside to crypto, but don't get into all the 99% trash. The easiest thing you can do is buy the equities, because the equities like Robinhood and Coinbase, these don't have all the things that we talked about. They are not outright scams, obviously. They don't have dilution and inflation, etc. They don't have all like the market makers, like all that stuff that I talked about. They don't have any of that. Now they might not get a 100x like some of these other tokens like you're thinking you want, which I don't know that any tokens will do that really, but they at least give you the safe upside to crypto. And so like that's where I actually focus a lot more of my attention and capital on, because you don't have to worry about all the stuff, because the SEC worries about that for you, right? And they're existing businesses. Even if the crypto thing doesn't work out, like they still have other revenue and other businesses. So well, at least in Robinhood's case, maybe not Coinbase. Okay, interesting. That's a good conversation. Let's do one more here. We've got a bit of time, and let's just talk stablecoins. So the stablecoin bill is coming, I think, like in the next month, maybe. Hopefully, and I think that's going to be really cool. Obviously, we've talked a ton about stablecoins, but we've got a few questions because from our pro community. Because in the stablecoin bill, there's rumors that they're not going to allow yield-bearing stablecoins. And so people have asked, what does this mean for Sky? Like, are they cooked basically? Because you can't, no company or person in the US specifically will be able to hold a yield bearing stablecoin, at least in like, they still could do it on a Web3 wallet, obviously, because there's nothing anyone can do to stop that. Like, if they want to hold it in their ledger or their MetaMask, they can obviously do this. But there are technically going to be rules put in place that you can't give yield back to the consumer. Which is dumb and super frustrating, makes zero sense, right? But that's what they want to do to at least to get things started, I guess. And I think eventually that will change. Does this impact Sky? Martin, I'll start with you. Is this a big problem? Like, what do you think?
Well, I asked Rune the very same question, and he was like, "Hey, it's just part of the game, and right now they might not allow it, but in the future they'll probably allow it, and it's not a big deal." That's my take, and how he responded. So I think he's right. Like, we still need to keep building, and if we have good products and good intentions, we are not, scamming people or stealing from people, whatever, then at some point we will get green light even for yield bearing stablecoins. It's just a matter of time. And I think also maybe like these fintechs 2.0, they will find a ways to get that exposure anyways through some I don't know, there's vault and you need to deposit and it's a, maybe different thing. And I don't know, like, but
Bitcoin.
Like,
it's
what
not a
about
big concern.
Circle giving USDC giving yield on Coinbase? Like, is that
So
allowed because it's technically different?
So Coinbase right now does it. They say it's marketing, right? Those are marketing dollars. But I would assume that that's going to go away, which would be very painful. That would suck. But I would assume that goes away. We don't know. What depends on how they word it and what they decide to do, but that would suck for sure. But I would say so. Like that is going to be a big thing. What happens with Coinbase? Because like if they can get around it, then it's all good. It's dumb if they, but it wouldn't make sense for them to put this bill in place and then just like allow them to just say
weird.
it's marketing instead. The one thing I would say, my take on it is this product of yield-bearing stablecoins is actually not necessarily targeted towards Americans and American companies because they can easily already get US dollars and put it in a treasury, and they can get their 4% on their treasuries today. You don't need crypto to do that. Whereas the rest of the world cannot. It's very like as a Canadian, I can't do that. I can get the Canadian dollar and get whatever the yield is in the Canadian dollar, but I don't want that. That's absolute garbage. I want the US dollar. Well, not the last week or so, a couple of weeks of the US dollar, but like obviously long term, you want the US dollar and you want access to basically the treasury yield. And most of the world wants that and they can't get that. And so Sky gives them that. So I actually think what Sky and the others, it's not just Sky, but what they're building for is the rest of the world, at least currently. And they can get companies, they can get people all around the world that will use that. American companies won't, and American people won't, which obviously is a big piece of the capital. So like it sucks, but like there's still so much room to grow in Brazil and in India and in Argentina. And like you list the country name, there's so many other places that will want this still, assuming the US dollar remains the global reserve currency. So I think there's just still such a like untapped market that it doesn't really matter. Because I also don't think that like most companies are going to be, at least anytime soon, are going to be like using yield bearing stable coins to like pay employees and things like that. Anyway, it is, as Martin always calls it, like a savings account. They're still going to use their USDT, USDC to like transact, make payments, things like that, which obviously you need American companies for that because American companies basically run the payment infrastructure. But like you're not going to use yield bearing stablecoin for that anyway, at least not anytime soon. So I don't think this is actually a big deal at all, though maybe it like impacts the price of Sky for short term for people that like get scared. I don't know. But ultimately, I think they'll have no problem continuing to grow their supply. I don't know. Any other takes on that?
I think Martin's right. Like, it's not a big deal in the long run. I think that the Circle is a very powerful force in America right now and is likely putting a lot of lobby dollars towards this stablecoin bill, as are some other big players in the US. And none of those players are the ones that are focused on yield bearing stablecoins. So it would make sense that we wouldn't get it in the first go here, but it doesn't mean that it's not going to eventually happen. And I think long term it doesn't really matter.
Martin, you had I don't know if you created this chart. I think someone created this chart, but you were sharing this and talking about the different types of stablecoins. This really helped me wrap my head around kind of like investing in stablecoins and what's really happening here. Why don't you walk us through these kind of different types and help us like understand this a little better?
Yeah, like stable coins are obviously like, the best use case of crypto right now and clear winners with product market fit and all that. And now it starts to feel like all the yield bearing stable coins are starting to converge into kind of similar path. And just again, like, I don't think that these yield bearing stablecoins, which are issued by decentralized protocols, are direct competitors to Circle or Tether. Because again, like, if I'm gonna pay for coffee, okay, sure, I'm gonna use USDC. But if I wanna have savings account, I'm gonna use staked USDS from Sky, for example. So I feel like those are two different use cases, and
Products,
that's why I'm saying that they don't necessarily compete to each other. There is type 1 stablecoin, which is a tokenized hedge fund. You can think of it as Athena came in and say like, hey, we have a interesting strategy that generates, I don't know, let's say 5-10% yield, and we just need you to give us dollars and we give you access to that strategy. So you can think of type 1 stablecoins as like, okay, there is one yield generating strategy, and they will just give you access to it. And we can, Athena is an example, or you can see Aave as an example. Like people can go and kind of lend stablecoins to Aave, and Aave through their smart contracts will be able to borrow your funds to some people who are looking for more money for leverage, basically. So that's type 1 stablecoin, where you have just one strategy that is mostly managed by smart contracts. But then at some point you will realize, and what's maybe Athena realizing right now is, okay, but what are we doing when the market conditions are not really favorable for our strategy, right? So Athena was giving people, I don't know, 20% APY Q4 last year, but now it's around 4% because there is not enough leverage in the market. So their strategy is not really that profitable. So they are looking for different ways, okay, how we could still generate money for our users. So now Athena is also bringing US treasury bills. So they have kind of more yield generating strategies that they can allocate their funds into, right? So that's type 2. And also, Sky has some strategies. They have lending, they have also access to Athena now, they can also use treasury bills. So that's type 2 stablecoins. You can think of it as DAO and looking to the markets, what's available, and how they could get access to these strategies. But when everyone is probably kind of heading into the future, and I think that Sky is pretty further, like closest to that end game, it's where they sit down and say like, okay, we think that savings products are still something that we haven't really opened, and we haven't seen a full kind of demand cycle for savings products. But I think like we all three probably agree that savings products are going to be a huge at some point.
Mhm.
And okay, we need to find a way how to incentivize the supply and demand. And by that I mean, why should people buy my stablecoin, kind of thinking, my savings product, and not anyone else? And that comes down to the yield you generate. So like Milk Road Treasury allocates their funds into Sky Savings Rate too, because they give you like the best risk adjusted yield available. And they might not allocate that much to Athena because they only have access to their strategy, which is using funding rates which are very volatile. And then the second option they have is only US treasuries, which are now around 4%. So, but they don't have anything between. So you will probably still use staked USDS from Sky because that yield, right? And now, okay, but we might need to incentivize that kind of demand side even further. So why should anyone, why should Robinhood integrate our savings products? Because they are willing to give you a certain kind of incentives that you are bringing more demand for their savings products. So imagine that I think 0.5, 0.2% is giving to all the people, all the front ends, all the apps that are bringing more demand, more users to Sky Savings Rate. So they are like incentivizing the demand for their savings product. And that's the demand side. And then there is a supply side. And okay, so we now might have a demand for our savings products, but how are we going to ensure that we are going to generate enough yield and in a sustainable way? So they announced something which is called stars, where people can join the Sky ecosystem, because Sky right now sits at 5.5 billion in USDC, which can be deployed elsewhere. But they only have like limited access to the strategies that are available today, because they had to go and like find all these strategies and do audits and all those kind of stuff. But now they are taking the opposite approach and like, hey, we have the money, so we give everyone opportunity to borrow that money, and you can go out there and generate the yield. It's up to you, but you need to put up some collateral. We are gonna put our own collateral as a MKR holders. So this system will just create a flywheel where, okay, I can borrow from Sky for, I don't know, 6%, and I can generate yield on, I don't know, let's say Berachain lending 10%. Okay, that's really nice. I can keep like 4% profits. So I'm gonna do it. And it will create the flywheel for Sky. So there are people, different actors on the market incentivized to bring all the yield strategies available to Sky. And there is a system that will just make sure autonomously how much they will allocate to your strategy, and like how they are going to track your performance, how they are going to manage your risks and those kind of stuff. So it's kind of creating an autonomous design to minimize human decision intervention, where I don't always need to come and say like, okay, that this guy is getting that much money, and everything is just kind of systemized in a way where that supply and demand might meet at some point. And you can think of it as a marketplace where they
Yeah,
are just
like a
connecting
platform.
supply demand, and that's it.
They're
Yeah.
they're becoming more like a platform. Instead of only trying to find people that want stable coins, they're finding all the other businesses that want to like deploy things and like get more yield. And so they're getting both ends of it, which I don't think anyone else is really doing. But it sounds like, do you think so? Sky is doing this. Are there others, or do you think it's just Sky right now? But do you think everyone's going to go that way,
I think
or do you think
so,
Sky's just
yes.
too far ahead? Or you think everyone will?
Well, if you think that everyone else is also kind of not trying
I
to
think the same
compete
thing.
with Circle and Tether, then they are gonna compete on yield. And
Right.
how are you gonna generate like the best risk-adjusted yield? It's impossible if you need to do all the decisions and all the yield sourcing yourself. That, yeah, it's just not scalable enough. And Sky is probably in the best position to profit from it the most.
An automated savings account giving you the best risk adjusted yields is going to be worth so much at some point in the future as this thing actually takes off. Like, I mean, that's what made banks such a big thing, right? It's like, hey, give me your money and I'll give you X%. And that was that's what built the banks back in the day, and then the banks are like, fuck it, we don't need to give these guys any yield anymore. And I think these savings products are bringing that back. And so like, obviously there's a massive TAM there. That's what literally built, these products previously. So it's gonna be cool to see that play out. And I think Sky is going to be one of the winners there. Okay. Well, that's it, guys. That was a good conversation. Learned lots. Appreciate it. And we'll see you guys next week.
Thank you, guys.
Thanks,
See you next
guys.
time.
Thanks for listening in, everybody. Have yourselves a wicked awesome day. Thanks for listening to today's episode, everybody. Before I let you go, I know y'all are probably spending some nice family time this weekend over Easter. And if you're hanging out and you're looking for something to do, I highly recommend you check out the new Vitalik documentary. It's called Vitalik, an Ethereum Story. It's available on Apple, Vimeo, Prime. It's available on a whole bunch of platforms all around the world. And it's a fascinating documentary, like a incredibly well-made documentary about Vitalik, his background, growing up, why he built Ethereum, how he built Ethereum. And it really gets you into his mind in such a powerful way. The best part about this documentary is it's not just for crypto people, anybody outside of crypto. It's actually a great, if you're looking for a way to introduce your family to crypto in a very approachable, very meaningful way, it's a really great way to do it. Check out the film. Link is in the show notes. You'll be happy you did. Have yourselves a great weekend. Happy Easter, y'all. We'll see you next week. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.